Hello, this is Tom Pizzuti with Trading on the Mark, and today is Wednesday, the 10th of 2024. Happy New Year to everyone. Hope you had a nice holiday season with your family and friends. So let's get back into the markets. The location's really not too different than it was a couple weeks ago. We did have a drop away. Well, I'll get to that in a minute. Let's just look at the charts first. So, looking at the weekly chart, first thing to notice after I get my pointer out, if you do recall, I have changed the way that I'm labeling this advanced. It is just uh, how I'm counting it out. I do still think it's a corrective move, so that nothing has really changed there. It's just that what this form is that I'm thinking sort of a three-wave move up, a B wave and down, and then a C wave up, as opposed to what I've had before was maybe treating, you know, and parentheses A here, parentheses B, and then this whole move being a 1, 2, 3, a 4, and a 5. So really it amounts to exactly the same thing in that this move would be corrective. It's just in kind of how this is counted, a little bit different. So it's more of an academic question than what is to be expected. What would be expected is that we need to get a 5-wave move up off of this late October low to complete the pattern. So we're just looking for this move to complete, at which point this whole fractal back from 2020, the lows in 2022, this whole fractal can be done. We would start a new fractal down at that point. So what else to look at? We're still up underneath those lows. What I was just talking about a little bit earlier was that we did have a drop away from that last week. And in early this week, we've recovered most of that drop. We're just under getting that gap filled. That'll be easier to see on the daily and intraday charts in just a moment. Other things to point out on this chart, see this 8 right here is from a study, an exhaustion study from Wave 59, the software package that I use to chart with. It's called the 9-5 study. And if you're familiar with the work of Tom DeMark, this is going to be very similar to, and I'm sure was inspired by TD Sequential. So same kind of ideas, similar ideas. It's proprietary. The developer doesn't talk about how it's made, just kind of how to use it. And that the 8 here is one short off of the first exhaustion signal, which would be on a 9. So we need one more high print on a weekly chart would give us a 9 signal, and that would be the ideal exhaustion. And we're probably, I think that we will probably get that to happen. If not this week, then maybe next week. Why do I also, other things to point out? Across the top here is an adaptive CCI. And so we could see that back from this high here in July, we ended up making a CCI peak. We had our pullback into the late October low. That took the CCI just under 0, which is it's reasonable. This you kind of see this as a potential point to kind of look for a reversal. Got a reversal back up, very strong, very strong, but not as strong as this earlier move. So we do have some momentum divergence on a weekly chart, negative divergence. So again, that's something that we can look for, that this move might be in the very late stages of its development, and we'll get some kind of reversal down in the coming weeks. Other thing, I think probably the most important thing I want to point out on this chart is cycle composite here. That's sort of in this sort of pink or kind of purplish flag line here. Anyway, you see that we have an inflection point that spans this week and next week. And that I'm assuming is going to be a high, again, either this week or next week. So take a look, keep your eyes open. Moving to a daily chart, we had a drop last week into what I would call kind of shallow support for a wave four. I mean, it works. I mean, it can work. But what I don't like about it more than the number that it pulled back to, the value is fine. What bothers me is that the waveform is pretty simple. Usually, fourth waves are pretty complicated. A lot of sideways movement, or up, down, lots of threes or something. So the only thing that bothers me is that I kind of don't trust that we're pushing all the way up to a new high on this move. Now, yes, we did get a gap up on Monday, pretty substantial move, and reversed most of the drop of last week, all in one day. But I'm worried that we might get a retest of these supports. If not on Wednesday, then perhaps Thursday, when the CPI number comes out, which is probably going to be the most important economic news this week. Yeah, there's some bank earnings starting to come out on Friday, but I think earnings are going to be more of an important thing next week and then the following week after that. So, and that's something to look forward to later this week. I think it's going to be the CPI on Thursday morning. So, the question is going to be, are we advancing into Thursday or Friday, or are we going, pulling back and setting up a move to kind of move up off of the CPI? So, those are the two options that I see as worth watching this week. Moving into the intraday chart, same story. We had kind of a, when we call this a provisional wave four low, a rise off of it into some resistance that is just underneath the gap fill. And the question is going to be, is this potential cycle inflection here enough to reverse the market down such that we drop down into possibly making a low on the CPI number that would allow for an advance up off of it into a new low, up into a new high? Or is the market really just real eager to push through this resistance, kind of run stops a little bit and make a new high on the CPI number itself? So maybe a new run those stops, make a new high on Thursday. Those are the two options. I think Wednesday, I think later today, not expecting a lot of movement again. I lean towards the idea of, I'm open to this idea of a retracement, making a more complex wave four. But let the market tell us if we start moving up above 47.75. Well, then don't fight that. We don't necessarily have to make a lot of movement on Wednesday, but if the market is starting to break up, go with it and try to push for 4,800. Probably a little bit over, say, 48.06. But if we do start to fall away and break underneath the lows that were set on Tuesday, then look for at least a test of 47.11. And if that doesn't hold, then look for a new low underneath these lows, maybe late in the day, such that we're set up to maybe make a little spike low on the CPI numbers and then have that firm up and then go on to make a new high. So that's how I see how the week kind of plays out. Again, I think we're very close to having a terminal move and a pretty decent reversal in the indexes. It's just whether that's going to kind of hit this week or whether that's going to hit next week. We'll just have to see. But be on your toes. It's going to be interesting. I think that the year is going to be pretty eventful. So hopefully you've rested up and are ready for it. So good luck, and I'll speak with you next time.